Hello, welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined down the line by Dawie Roodt for our week ahead interview discussing this week's potential market movers and shakers. Dawie, welcome. Now, last Friday's US jobs report was stronger than expected, with an increase in non-farm payroll employment of 204,000 in October. The figures may have been marred with uncertainty, but seem to indicate the US went into the shutdown in reasonable shape. With that in mind, how would you describe market sentiment as we enter the trading week?
Well, I think the correct description for market sentiment at the moment is uncertainty, and special kind of uncertainty, because the unexpectedly good employment numbers in the United States, in a way, is not good news. So we've got good news that is actually bad news. And the reason why it's bad news, especially for emerging economies, not only emerging economies, for the euro as well, is that chances are now better that the United States will start with tapering sooner than expected, and that, of course, is likely to lead to an outflow of capital out of emerging economies and probably out of economies like the Eurozone as well. In the meantime, the U.S. equity markets appear to be quite upbeat about these better-than-expected employment numbers, and I think the markets in the U.S., especially the equity markets, are pricing in probable or possible stronger economic growth over the medium term, and I think that's the reason for the optimism in the United States. But that is not necessarily shared in the rest of the world. What we've seen so far today is that the rest of the world are probably getting pulled along with the American positive sentiment at the moment, but it's really open to debate on what the impact of this probably sooner now than expected tapering is going to be on the financial markets.
The UK will be in focus this week. The Bank of England will likely recognise that the economy is growing faster than expected and that unemployment could fall faster than anticipated. Markets paid little attention to forward guidance when it was announced in August and have priced in a rate rise for the third quarter of 2015. Is this in line with your expectations, and do you think the Bank of England are getting it right at present?
I think what we have to realize, and this is not only a United Kingdom question, but it really applies to all the major central banks in the world, is that the monetary policy approach that we are seeing today is totally out of the ordinary. We've got interest rates at exceptionally low levels, but that is not really important what is going on with interest rates at the moment. What is more important is the monetary stimulus by way of so-called quantitative easing, or different other names that it's called. I think the expectations certainly are, and I think the tune will be set by the United States, is that you end with quantitative easing the end of next year, and thereafter only, in the beginning of 2015, can we start talking about normality in monetary policy again, and that applies to the United Kingdom as well. So I think the time frame of a possible increase in interest rates in the UK is probably around about the mid-2015s.
Further down the line, investors will be closely watching Thursday's Senate hearing to confirm Janet Yellen as the first chairwoman of the Federal Reserve. Some analysts believe the danger for the Fed is that the increased dovishness comes at the wrong time, and the Fed is in danger of losing credibility over policy, which can manifest itself in increased interest rate volatility and an increase in long-term inflation expectations. But what do you make of this analysis, and could you tell us about any other potential market movers our viewers should keep an eye out for?
It's going to be very interesting to see what the senators are going to ask Yellen in the Senate, what questions they're going to ask her, because what has become clear is that interest rates is not the only instrument available to central banks, and that quantitative easing, which was supposed to be a temporary measure, certainly took up the color of a more permanent policy instrument in the hands of central banks. And the question I would like to ask Yellen is how long or whether quantitative easing should be seen as a normal monetary policy instrument. And that will really be the question, her answers to that. And of course there are many other answers to that as well, many other questions to her that can possibly affect the financial markets. Another question could be how much money should the Fed keep on pumping into the financial markets, and is she concerned about asset prices reaching record levels? So I would really think that the Yellen in the Senate will be the highlight of this week. That will give us a bit of an indication on her way of thinking. We know Bernanke certainly is a so-called dove, a very accommodative central banker, And Janet Yellen is quite often referred to as a super dove. And it would be interesting what her answers to those questions are going to be. My suspicion is that she's certainly going to talk up the markets.
We also have Eurozone GDP to be released on Thursday. The ECB put an economic spanner in the works with their surprise decision to cut interest rates. Thursday's figures may give some indication as to whether this decision was warranted, but taking this and all we have discussed into consideration, what is your outlook for the euro against the dollar?
I think the ECB is a little bit frustrated by the economic activities that are taking place in the Eurozone. I think they would have liked to see a more robust economic recovery in Europe, or at least some economic recovery in Europe. You can hardly talk about any economic recovery in the Eurozone. The main issue in Europe, however, is not really monetary or monetary policy. The main issues are fiscal. And I think what Dawie is trying to do, he's trying to use his last arrow in his quiver, trying to stimulate that economy, but I'm afraid it's unlikely to have much of an impact on Europe. I am, however, fairly optimistic on the euro itself, and part of the reason is simply that euro assets are better priced, are more attractively priced than many emerging economies, and certainly more attractively priced than the United States. And for that reason, we may see an inflow of capital into the Eurozone. Apart from that, if we get a little bit more clarity on some of the peripheral economies and maybe some signals, especially from Germany, that they will keep on assisting some of these countries that are highly indebted, that will make those countries' assets very attractive, especially the yields on the longer end of the yield curve. And I will not be surprised if we see a substantial amount of money flowing into the Eurozone, not because of economic activity, but simply because of the attractiveness of the yields, as well as the continuation of quantitative easing from the United States. And that will be determined by what Janet Yellen is going to say in the Senate this week.
Dawie, thank you so much for your time and perspectives today. Well, viewers, to find out how all of these events unfold, make sure you click back to Dukascopy TV. Goodbye for now.